It is a good afternoon. Happy Saturday to everyone. Happy end of week. I hope everyone's had a good time trading. Anyways, I'm going to go through my analysis this week, what I kind of saw. And I've been thinking of also streaming my sessions. I may start doing that, but we'll see. So, at the beginning of the week, I was looking at the dollar. I usually start by looking at the dollar, and I'm noticing that we're in a hurry here. We had a monthly fair value gap. We initially drew into it, rejected from it, came back to fill in a volume imbalance, and we came all the way back up in a hurry, right? So notice how we are coming down to these fair value gaps. We're not filling them completely. We're coming to the high of them and immediately going higher. Not really retracing much. We had a little bit of consolidation after we got up above that high, and then price very quickly ahead of what happened over the weekend. The dollar pumped up, so I can only see this continue. That there was no reason for me to want to look for a retracement here. We have a clear target in mind. It's these highs, and we just got out of a consolidation here. We consolidated around here because we had came up, hit these highs. We did not retrace very much. We came right back up through it, and this was because of some events that occurred. So I'm seeing this as a target up here. I think a dollar is going to be way too overvalued if it gets all the way up here. This was yesterday's high, so it would be a lot of foreign currencies would be very bearish too. And I think a lot of things can start to happen if we get up here. But we'll see. And I had two biases in mind. Alright, they're both here. The first one is we open up and we trade higher to make a high of the week. And we use that swing higher to expand to the lows, to the sell side liquidity down here. And the second one is that we initially open up to drive lower, make a low, and then I wanted to see very quickly price come right back up. I didn't like this one very much because it doesn't line up with the dollar. If the dollar is going higher, this bias would be a lot harder to achieve. Alright, the other thing is I'm using a 60-day look back. So here up at the top you see I'm using a 6-day look ahead, a 6-day look back. At the beginning of March I was anticipating a manipulation run, which we did have that in this week, a run higher above this high, and then I was expecting March to completely drop lower towards the sell side liquidity. Instead we waited until April to do that, and this is our quarterly shift. But if you keep moving the 60-day look back up till the current day, these lows are just about at 55 days back. All right, these lows at the beginning of February from where the week ended. So at the beginning of the week, there may be like 50 candles back. And that is a perfect condition to just very quickly expand towards these lows. If we know that we're already going to be bearish because there's SMT and we're at a very big premium, we've had a run on these stops here, this would be a good condition to anticipate something like this to occur. And there's also, I'm pointing out the SMT lower. That's why it's one reason I had the second scenario here. It was looking like maybe it's a little bit bullish, but I suspected that this was fake SMT and that we would break beneath this because the Dow is trending lower, the Nasdaq is going higher. But there's also this SMT up here, so it can conflict each other. And I suspected this would be the bearish one, since it formed afterwards, and we hadn't really taken out a big amount of sell side. But anyways, this is how the week played out, and this is what I'm talking about up here: the 60-day, 40-day, 20-day look back, and I mark it there. And you see it, if you go back 60 days, we're within that 60-day look back. And if you take a range from the low all the way to the high, and you have 50% in the middle, that's what these percentages are. What this is showing you is that within the last 20 and 40 days and 60 days were in a very big discount. So much discount that it's negative because it's beneath the lows. So the range is from this low to that high, and we're in a negative 27%. So I don't really want to see this keep going next week. I would expect a little bit of consolidation, and that would allow this low here, or maybe a new low that's created next week, to become the low of the range, and this range would then be within a premium. It would create a new range. It would be within a discount, and it could go up to a premium. Sorry, it already is in a discount. Sorry, I mean it could go up to a premium easier. And I think that's do I show? Oh yeah, I showed the Dow and the Nasdaq together. So that's the S&P, just a visual. You see the Dow is making a higher high, the Nasdaq's making a lower high. That there is S&P, and we see the more S&P at the beginning of the week, right? With the Nasdaq making a higher high, Dow making a lower high, right there. Now usually the one that does the lower high is usually more bearish, and the Dow had been already a little bit bearish, but remember that this higher time frame S&P is there. It's bigger and it's more dominant. So maybe intraday that day the Dow was a lot more bearish. It was obviously a lot lower, not really wanting to go as high. But then look at the delivery afterwards, how much more bearish the Nasdaq was compared to the Dow, right? Just pointing that out so you have a visual. But this is my Monday chart, and I was looking at this 4-hour fair value gap. I was also looking at this one here, this inverse one. I didn't want to see this inverse one get broken, and I was looking at 50% of that daily order block, which is this up close candle. That's an order block because we've came up, we've ran some stops. We also left SMT, right? I believe actually you can see it here. This might actually be the SMT I'm talking about. How the Nasdaq came back up above this high to create an order block, and then the Dow didn't, right? And that's that run up on the daily chart left SMT, and you could come back into this candle and find resistance. So that's where the high of the week was formed. We also formed it into an old new week opening gap from the end of March, and then price continued lower Monday. The beginning of the day started by trending higher, and in the morning we reversed. So, when I got onto the charts and I saw all we really did ever since Asia opened is just trend higher. The thing is that oftentimes when previous sessions trend, you have to lower your expectations. But there's something important to note about the trend, is that these trends need to be significant trends. This isn't really a significant trend. This is just a slowly going higher. There's lots of trailing stops here. There's a lot of consolidation, and just kind of waiting for volatility. This isn't really an expansion. If we had something like this during London where we expanded in a single direction higher and we really went higher, then I would lower my expectations for the AM. But immediately when I got up and I saw how slowly price was going higher, I just knew it was waiting for volatility to go lower. So then 8:30 opened up with news, which was important. When Monday has news, it's almost always going to be a really good day. Price went higher and lower, kind of chopped some people around, and one more time price got above that high to kind of trick people into people thinking it is bullish and it is going to continue going higher. And then price immediately came right back down, left a 15-minute fair value gap, and another news driver, the 10 o'clock news, or this was a 9:30 open, I think it was 10 o'clock news though, came right back into that fair value gap to continue expanding lower, and then it continued all the way throughout the rest of the day. Right, I'm also using the opening price for the 8:30 and I'm also noting the midnight opening price on paper, and you see the price inside that 50-minute fair value gap, both above that opening price. It's a very high quality setup there to take. But let's dissect it a little bit more. This I'll explain this later, but first I want to dissect that. So initially price dropped down, came back up into the 50-minute fair value gap. You can see a 5-minute one there. There's SMT, the Dow making a higher high. So the Dow opened at 9:30 and went higher, while the Nasdaq went lower. That's SMT. And after about 30 minutes of the open, near the 10 o'clock hour, right before the news driver, we run up above this high just slightly. We don't really need to run up above that high, but that high is used as a PD array to drive price lower. And you start to see displacement after hitting this high. The fact that we were unable, because here, we have this high and we get above that high, and that's that creates a small price leg lower, but we still have some fair value gaps here that could support price a little bit, maybe keep it in a consolidation ahead of the news. And then we make another high. We don't really get above it very much. We slightly get above it, and then 10 o'clock news just absolutely smashes it lower. I believe at 10 o'clock. Actually, no, this was the 10 o'clock news where I believe we opened up here, went higher above that, and then, left this fair value gap there. And so that's what you look for. You're also trading above a 5-minute swing high. So these were all short term. Well, these weren't really swing highs. These were just highs of candles, and we're just kind of consolidating ahead until that 10 o'clock news driver comes in and brings price lower. And I'm really trying to figure out where that 10 o'clock news is. I really think it's here. But anyways, lots of range. Now this play, obviously, this is like a bias. Once we hit that new week opening gap, expectations would be lowered, and I'd be looking for something else. And I'll show you what I was looking at after we hit this new week opening gap. If I go back here, so after a little bit of time, prices drop down, and it leaves this fair value gap here. Now, I said that this would be counter trend, and I wouldn't be surprised to see this fail, because notice how, trend. What is the trend? How do I know what the trend is? We've dropped down, we've taken sell side liquidity, we've taken out all these stocks, we're beneath the midnight open. Why wouldn't we want to see a reversal? This seems like a 2022 model, but I know that the daily chart is going to expand lower. Remember at the very beginning, the daily chart, I said if we come up first and we make a high, and then we really expand, we show a willingness to expand lower, then I would be bearish. And so I know that the daily chart is going to expand lower. Remember, we're still around the new week opening gap. So we've opened up, made the high, came back down, and we haven't seen that down close candle yet, lower daily prices. And we still have these relative equal lows here. So I know that Monday can very well reach for these, especially since we had two news drivers. And I said that I would want to see this fail, or I wouldn't be surprised to see if this fail. But I was just aiming to get back into a premium to see if, because I don't like to sell in a discount, and I wasn't able to get in up here, so I wanted to see this fail. Well, to be honest, I was in the car. I was gone all week, but I talked about this on Monday. I made a small video. Then it made a high, and made a high right above that short-term high there. You see that? And as soon as we got above it, we created this down close candle, and we created an up close candle, and then we were showing that we didn't really want to expand way past it with speed and strength. I decided I would just cut that trade there and start looking to go the other direction. Funny enough, that's exactly what happened. We started to see some SMT, right? As I decided right here I would cut the trade, we started to see some SMT. The Dow continued going higher, the Nasdaq stayed lower, and then price started to move lower past this 5-minute fair value gap. Okay, and you could have looked for, this is the play. No, wait a minute, is this? Yeah, it's 10 o'clock. So I don't show it. But you could have went on the lower time frame, looked for a fair value gap, maybe the 1 minute 30-second chart. Anyways, this brings me to Tuesday. Tuesday was a very boring day because if you look at the daily chart, we've already expanded Monday. That is a range where we went from around 18,400 all the way down to about 17,900. That is 500 points that we covered. So that's a lot of points. And if we don't have any news on Tuesday, it's normal to see this consolidate. Wait until there's more news and then continue dropping lower. Especially since we didn't consolidate on Monday. So I'm going into Tuesday thinking, okay, the high of the week has already been priced in. We're not going to do anything. And funny enough, that's what happened. The only price action I saw was high quality. Was Asia session was pretty active, trading lower. Right, so maybe you could have traded this Asia session. It doesn't look too bad. But then London kind of looks pretty bad. Sort of trending higher and then turning back and running out the Asia lows. But notice how the actual London session from midnight to 6 a.m., that just consolidates. And I'm using midnight to 6 a.m. because Asia session is from 1800 to midnight. That's 6 hours. London session or Europe, 6 hours. New York morning session, 6 hours. And the afternoon session, another 6 hours. So the day is broken up into 4 different quarters. So that's how I kind of view things. But London obviously stayed inside that Asia session. So there was lots of liquidity at Asia highs and Asia lows, or the overnight highs and lows, that range. And then we quickly run up above that range. But after that, it's just nothing happens. I believe Powell may have spoke in the afternoon at 1:15. I think that was like the only news. He did a speech. And a lot of economists are now, after his speech, the news was that they're starting to doubt there even being any rate cuts at all this year. So because he kind of told them that this summer will not have rate cuts. So now my friends are telling me it's going to be September. So we'll see in September if there's going to be rate cuts. But this is obviously very bearish for the markets. Right? And the reason that's bearish is because the markets have been reacting in a way where everyone is already anticipating a rate cut. So at the very beginning of the year, when Powell was talking about rate cuts this summer, that was priced into the market. And the market at the beginning of the year, if you can just look at the dollar, no, maybe not the dollar. It's not a really good example. But the stocks at the beginning of the year just started going up a lot. Bitcoin exploded like crazy. Which, if it is a hedge against inflation, it doesn't make sense. It's going up that much. But a lot of things were going up at the beginning of the year. We saw some huge gains. Look at just the month of January, how much it's expanding. Then February continues, slows down a little bit. But as we didn't get those February cuts, we didn't get those March cuts, and now people are like, okay, well, I don't think we're getting cuts at all. And it turns out on Tuesday, after we had done our daily, bias, after we had started to show our daily bias, we obviously saw that, okay, rate cuts are not coming. And I mean, I was able to be ahead of the markets. I knew they weren't coming just by looking at the charts. Well, it's not just the charts. You can look. I don't know what Powell was looking at to think that he can cut rates. In my opinion, it's just political, but that's a different story, right? It's obvious that now people are starting to realize that rates are not going to come down as fast as they can, and so the markets have went up because they thought rates were coming down. So now they need to correct. So I am still looking for lower prices in the near term. I think this is just the beginning of a small bearish move, if not a larger one, if not a big bearish cycle. But right now, I do believe we need to consolidate a little bit. I already said that though. Anyways, I went on a little bit of a tangent. I apologize. This video can be long enough. This is Thursday. We don't have much for the rest of the week anyways. Oh no, I did not talk about Wednesday. Where is Wednesday? Okay, well, I think this is going to be Wednesday, but let me pause. Okay, yeah, I had to change that to Wednesday. I don't know why I said Thursday, but yeah. So a lot of consolidation. I believe this was Monday. Yeah, and then Tuesday, 1800 right there. That's Wednesday's opening. So we see that London makes an initial run lower beneath these lows. Okay, then this is where a lot of people might be seeing that run lower, and they see price leaves a big wick. They see that up close candle. This is an engulfing candle pattern. They see price continue with up close candles, another up close candle, consolidation, a new high. A lot of people are probably looking at this price action if you take away this side and being like, oh, there's liquidity up there. ICT traders are probably looking at that high, and they're thinking that it's gonna go up. It didn't because I'll look. You need to look at the lower time frame to get a better idea, but just understand that this is a rejection block, just like a fair value gap, and just like any high or low, except the highs or low have liquidity, more liquidity than the rejection block would. So that wick can very well resist price, just the same as the high can resist price, or the low can resist price, or the fair value gap, or the order block can, whatever. They can still resist price. But another thing you can look at is that high that I was looking at was not the high of the day, but this high. Why? Because this was when Powell spoke. So you saw these huge wicks. I'm not looking at this wick. I'm looking at this wick, if not that wick. That wick still is long wick. I don't like wicks, to be honest. I think that I could turn off the wicks and just use the bodies and trade perfectly fine by just selling highs and lows. I don't really need to know the wicks. They just help me be more precise and help me see more PD arrays. That's all. Right, like fair value gaps and stuff like that. So without the wicks, maybe it's harder, but unless you're just trading highs and lows, it doesn't matter because the bodies have the most liquidity, and the bodies are here. This was the highest up close of the day, and that was the lowest down close of the day. So I'm looking at those bodies, and I see that price gets above that. It's taken a bunch of liquidity from a previous day consolidation, and it runs right back down very violently. So also SMT, Dow making a higher high. So you need to look at the Dow often, and you'll see that before it reverses, there's always SMT. Run stops. This is an order block. Price gets beneath it, but you also want to note the time where these stops get ran. It's once again 8:30. So you have this is a 15-minute chart. You have the 9 o'clock hour, 8:45, 8:30, 8:45, 8:30. Yeah. So I guess 8:30. I thought this was gonna be 8:30. 8:30 starts to run higher. That's the opening price for the morning. Then you have your midnight open, which is just above here, just about there. And you get price above the 8:30 open and the midnight open, you're in a very big premium after hitting buy side liquidity. There's no reason to keep trying to see this high get hit, right? And as soon as price opens up at 9:30, it starts to shoot it lower. So this is more SMT on the Dow. 9:30 opens up, so you see 9:30 right there, right around here. The Dow starts to climb higher as the Nasdaq is going lower. You get a little bit of consolidation, a run higher, and then an expansion with a nice fair value gap. This isn't a very obvious trade, I'll be honest. This is, and I'm aiming for a low-hanging fruit objective. Not an obvious trade at all, because there is that run on stops. There is this whole price action here is a breaker, and if you sold the buy side liquidity, if you sold those highs, then that would have been fine. That 5-minute breaker too, you can wait till it closes beneath, sell a 5-minute breaker. You can do, but there's many different ways you can get into this trade. I'm not saying that I would have seen this if I was there live watching it. I did see this live watching it, and I didn't trust it. Because you see that on the 5-minute chart, I always look for a 5-minute short-term high, a swing high on the 5-minute chart, to be broken through. We had that there on the 15-minute chart, and then we had a 5-minute short-term high consolidate, a C around above that consolidation, then it went lower only after we ran that 5-minute short-term high. And I didn't trust that. I saw that in the morning and I just didn't trust it in this area. And I said that I would just wait. Maybe 930s can open up, make a run higher. In this case, the Dow did that. It made a run higher, and the Nasdaq stayed lower. And so I just said, I'm just not going to do anything. And it continued going lower. And then it made a nice run lower beneath the slow hanging fruit objective, came back up all the way to this fair value gap, and continued to go lower, the rest of the day, because the bias is to go lower. It just continues to go lower. And then this is Friday's opening. Alright, so Friday we're very near the sell side liquidity. You can definitely chase. What you would do here is you'd go down to the hourly chart, drop a fib from whatever range you want to look at. Price gets into a premium, look for shorts. Keep doing that until it doesn't work, and then price starts targeting a level of premium on the higher time frame. So that's what I did. You see overnight we once again traded higher. This time though, Asia expands. This is a significantly large Asia session. But London at midnight, you mark out the London open, runs up, reverses, starts to trade lower. Now this was Thursday, and I did not trust this because the midnight open is around here, and we're beneath the midnight open with this 15-minute breaker. So I didn't really want to take anything, and we had news drivers at 8:30. I believe we might have also had something small at 10. So I didn't really look at much. Actually, no, we did have something at 10. I think it was pretty good. High impact news, but we had initial jobless claims, which is pretty big, at 8:30, and it caused a lot of consolidation, as you see there, until the news came out, and 9:30 open ran that sell side liquidity. So after that, there's just really nothing else to do. Like, there's nothing I would really want to do. It comes back to the 15-minute breaker above these relative equal highs, and then it continues to run lower, making a 3 swing high pattern, 1, 2, 3, and it continues to run lower. But again, there's just nothing I'd look for really. I have the midnight open marked up here. It gets back above the midnight open. That is a premium. But we've already hit the previous day low. I would just stay out of it, to be honest. But if let's just pretend like this low did not get hit, it is pretty good when it comes up here. You have initially price runs up, grabs that buy side liquidity. You probably got on the people that go down to the 1-minute chart, they're shorting this candle because it shows an initial drop. That next candle is a down close candle. Then price comes up right above that high one more time. Remember, the bodies tell the story and the wicks do the damage. This time the body closes above that 5-minute swing high, leaves an order block. We never go back into the order block, and we never go back into the 5-minute fair value gap. It was pretty hard to find a trade, but if you go down to the 1-minute 30 seconds chart, inside that 5-minute candle, you can find reasons to short. And we're above the 8:30 open, we're above the midnight open. That would have been a good short, but again, I just sell side liquidity was taken, and yeah. And on Friday, I was not there Friday to do anything. I was gone all day, and again, midnight open, we trade above it to an order block. Okay, those up close candles there in that consolidation. We leave a small 15-minute short-term high. We run above it. Price comes back into this fair value gap that's left at 9:30 open, and then expands lower. And look at that midnight opening price acting as resistance. Now, at the high of the market, that's around 8:30. This time we don't have an early move at 8:30 higher. So if I'm looking at this 9:30 open, we're underneath the 8:30 open, but we're above the midnight open, and we're far above the midnight open. That's something you want to note too. We're very far above the midnight open. So it is understandable to see a big move down, but you see the way we see it down is very high resistance, right? Because it's a Friday, not much liquidity left, and we're being very slow. I believe too, if I'm not mistaken, we already hit sell side liquidity, and we came down a tick away from maybe a couple ticks away from the daily order block. So that higher time frame level at the beginning of the week that I was looking at, we've already hit that, and we've came down to a daily order block, this one, right? So there's really not much to look at. If I had the choice to trade on Friday, I probably would have not traded, because there's just nothing really to look at. But I guess the logic's sort of kind of still there. We leave a short-term high here, probably a short-term high on the 5-minute chart. It definitely is, and we come back up above it into a 15-minute fair value gap, and we expand lower, come back one more time to this fair value gap, continue going lower, and now the up close candle, they all act as what? They all act as resistance. So resistance there, resistance there, resistance there, resistance there, resistance there, and this range is completely balanced out. So price had no real reason to come back to a premium and fill anything. It just comes back up above a short-term high and then continues to go lower slowly for the rest of the day. And that's all. That's it. That's the end of the week. All right, so that's all.